So with that, let's move on to our last panel, which is going to focus on building global bridges in Agritech. The panel is going to talk about cross-border opportunities and challenges in the Agritech space. Our moderator for this session is Arindom Datta, Executive Director, Rural and Development Banking Advisory, Rabobank. He is joined by Brenda Gunde, Global Senior Technical Specialist, ICT for the International Fund for Agricultural Development, Hemendra Mathur, Venture Partner, Bharat Innovation Fund, and co-founder ThinkAg. Kahn, Managing Partner, Omnivore, and Simon Weibusch, CEO, Crop Science Division, Buyer for India, Sri Lanka, and Bangladesh. Yeah, Arindom, over to you.
Thank you, Raki. Now, inclusive innovation, yes, we are going to talk about inclusive innovation in the agriculture space, and we are going to focus on smallholder farmers. And we are going to explore whether, firstly, technology, does it impact positively for smallholder farmers? And second is whether this technology can move across geographies. We have four very good panelists who would speak on these topics, and I'll jump straight to the to the panelists because we have a time constraint and some or two of our panelists have a hard stop. First question to Mark Kahn. Mark, can you give us a brief overview of the key pain points that technology and ag-fintech innovations are trying to address, particularly for smallholder farmers in India and other emerging markets?
Sure, this is very fundamental to the work that we're doing here at Omnivore. We like to call it our theory of change, and we see four major challenges that smallholder farmers in India face, but that are commonly faced by smallholder farmers across the developing world. First big pillar is farm profitability. Right? For a long time, the dialectic around agricultural development was all productivity based. How do we increase productivity? How do we double productivity? How do we bring productivity up to the levels of the Western world? The problem with that is that if you don't have a market for all of your productivity gains, you glut prices and you're exactly where you started. Right? If today in India we doubled the tomato yield overnight, we wouldn't have a market for it. They would be on the side of highways and byways and rotting in the sun, right? It wouldn't help. And so I think over time, there has been this shift away from productivity towards this focus on profitability and income. So first major pillar is how do we make farmers more profitable, right, with what they're farming. Second pillar is resilience. Resilience, I would think of it mathematically. Right? Productivity is the first pillar of profitability, right, is one thing, but how does that profitability change from year to year? The great challenge of farming is that 1 year it's feast and 1 year it's famine. 1 year you do very well, and then 2 years you don't, and then 1 year you do. And this is part of the challenge because farmers hate this. This is why they're pushing their children out of agriculture. There is no stability of income. So how do we bring resilience to these systems? Third pillar in the Omnivore theory of change is sustainability. And unless we address this, unless we address the amount of natural resources the agricultural sector is consuming, unless we address the challenge of water, of soil, and of food waste, the system is not sustainable and it can't last. And even if we accelerate profitability, even if we bring resilience, if this isn't addressed in 20 or 30 years or even 10 years, it's not going to work. And finally, we look at this issue of climate action. Of catalyzing climate action, because while the sustainability challenges are immediate and apparent and on us, right, we also know that there is this huge challenge of climate that is, coming at us like a light from an incoming train. And that includes both, right, mitigation and adaptation resilience. Mitigation because climate represents 20% of India's agricultural emissions, and adaptation resilience because India is at the pointy end, right, of climate change. If we were Russia, if we had Siberia, if we were Canada, there's some upside to climate change. In India, climate change is going to devastate unless we adapt to it. And so bringing solutions for adaptation and resilience are very, very critical. So these are the four pillars that we look at.
Wonderful. Thank you so much, Mark. That was comprehensive and very, very sharp. Brenda, over to you. Now, you have an overview of the use cases of technology for farmers' economic welfare in the emerging markets. What, in your view, are the 4 to 5 areas where technology can have a meaningful impact on smallholder farmers in a very short time frame.
Thank you. Thank you so much, Arindom, and thanks to UNCDF for organizing this event. As Mark has mentioned, the agriculture sector does face a constant instability. As we know, the COVID-19 pandemic has had significant impact on and disruption on agriculture, especially when you look at extension services. And that has accelerated the demand for digital technology solutions that will support agronomic advisory to support rural farmers. Mobile-based solutions are being used to provide information on agriculture practices, especially on production, weather, climate, but these are using low-tech solutions, using interactive voice responses, using SMSs, using USSD, which is unstructured supplemental service data, as well as voice dialing. And these will continue to be important for rural farmers, cognizant of low resource levels, access to power, infrastructure, and connectivity barriers. Therefore, if you're looking at these emerging markets, expanding the expansion of the use of smartphones will still be important. However, we need to be cognizant that the 3G and 2G connectivities will remain relevant in this kind of markets for quite some time. If you look at the report by GSMA in terms of the penetration of 4G connectivity, this is being widely adopted in Africa. However, if you look at low-income economies, these legacy systems will continue to be around for quite some time. So therefore, the uses of digital advisory services and personalized information on weather, markets, as well as information to farm inputs, will still need to leverage these existing technologies in these spaces. There is evidence on use cases in Africa, especially in Uganda, Rwanda, and Kenya, as well as some Asian countries like Bangladesh and India, where these services have been so significant to support rural farmers have access to information weather. Organizations, for example, like ourselves, we are working in provision of digital advisor services in collaboration with government and providing this information in fragile contexts in Nigeria, as well as in other countries. So for startups working in these areas, the investments in digital advisory services will continue to be relevant. The other areas is the growth of mobile money. If you look at the way mobile money has revolutionized digital payments, we can see that there's an increasing demand in Africa and other continents. There's also an increasing demand for cash crops such as soybeans. If you look at groundnuts and maize, which has created an opportunity for growing demand for mobile money and digital payments. In sub-Saharan Africa, for example, mobile money has increased to save more than about 180 million, and the numbers keep increasing. And this is important for startups to understand as they get into these markets. Because if you look at the financial sector, digital payments in Africa will continue to almost penetrate into formal institutional and banking services. We have seen this in Kenya through the M-Pesa. We've seen that in Zambia through the MTN services for mobile money. So there is an opportunity for startups to enter into this market. And the last point is about the growth in village savings loans and access to loans and farming inputs. Digital tools do have a major role to play in this area to support farmers access loans, especially on equipment in long term, but also in terms of some models for assets acquisition for farmers. There are Agritech companies that are emerging in Kenya, in Ghana, and Nigeria, who are using models such as pay-as-you-go services, whereby farmers can be able to access these loans to get equipment utilizing the circles and cooperatives and get these loans and pay in installments. So there is a growing demand for that. So we need to be cognizant as we're getting into this space, especially for startups, to see which entry points they can pick on and how they can play a role in these markets. Over to you, Arindom.
Thank you so much, Brenda. And now over to Hemendra. Hemendra, we heard from Dr. Chintan and Kunal the importance of mentorship. And you are the mentor to go to in the Indian markets when it comes to ag tech and technology in agriculture. Now, and there was also a discussion on inclusive technology solutions. So I would like to ask you on impact. Now, what kind of environmental and social impact are startups in India making? And what would it take for them to scale up? And what has been preventing it so far from really talking of, impactful technologies scaling up, which works at the smallholder farmers level?
Thanks, Arindom. Very good question. So first of all, I would like to segregate social and environmental impact. If you look at social impact, especially in the agri-tech space, I would say there are two major themes. One is increase in farmer income, or to be very precise, improvement in farm economics. And second is the employment opportunity that gets created, especially in the rural areas, right? So if you look at the impact on farm economics, though I don't have a structured research data, but the startup that I work with, what I found that for a startup who's adopting some of this innovation, let's say access to markets, some primary processing on the field, access to institutional credit, which can possibly reduce his cost of credit from, let's say, 60% a year to maybe 24% a year, and optimal use of inputs through data advisory and better access. If you club all this, the potential impact per hectare for a farmer, which is probably, let's say, doing some staples, maybe a wheat paddy combination, could be in the range of 30 to 40,000 rupees a year, right? And we're talking a farmer who's earning, let's say, about 1,25,000 rupees a year. There's essentially a 30 to 40% impact in terms of the economic value that can be created. And if you apply that formula, you are essentially tripling the farmer income in 5 years instead of doubling, right? The target that government has set for itself. And if you look at some of the value-added crops like spices or horticulture crop, that multiplier could be much bigger also. So I think there's a clear evidence. Probably, of course, we need more data points to support this, but that's my experience. On the employment generation, I think this is one narrative which often gets missed when we talk about agri-tech impact. And that to me is an equally important narrative. If you look at for any agri-tech innovation to reach to rural areas, as per our research, maybe 15% of India's farmers have adopted some sort of ag-tech innovation. If you have to make it 50% or let's say 90%, maybe 8 to 10 years, you need a lot of support from the ground. When I say support from the ground, essentially rural youth, village level entrepreneurs, FPOs, NGOs, local panchayat and all that. So there is a huge opportunity for creating employment for the guys who come from rural areas. They can be aggregators of farm produce. They can be doing some primary processing like dehydration, cooling, etc. They could be flying drones, even stuff like that. There's no dearth of opportunity. So I think that is an important point that we should keep in mind, that any agri-tech innovation, if it has to scale, will have a huge impact on the rural employment. My guess is for ₹1 million invested in agri-tech, 2 direct jobs and 8 indirect jobs gets created in rural areas. So it's a 10 per $1 million of investment. I don't think many other industries can claim that kind of employment intensity. And for this impact to scale, I think the capital is already there, as we have seen in the last few years, the way venture capital has come in. I don't see we need any catalytic capital in this space. But if you look at environmental impact in particular, solutions around water use efficiency, labor efficiency, energy efficiency, I think that is one area which needs a lot of effort in terms of capital, which is slightly long-term, maybe blended finance product, not necessarily in the form of a VC capital, and multi-stakeholder engagement. For any of these areas, kind of solutions created by, let's say, likes of Yuktis or Cultivate or Urdhvam or Fasal, for example, I think for these solutions to scale at 3x at the rate they're scaling right now, you need multi-stakeholder engagement, bringing in policymakers, state governments, district administration. I think that is the effort which is needed if you really want to drive environmental impact. Unfortunately, in India, it's lagging quite a bit. If you look at world over, 6% of venture capital is going in climate tech across sectors. I don't know what is the number for India, but I'm sure it is probably less than 1%, right? So I think that's where we need a different form of capital and a lot of support coming from the government and the policymakers.
Thank you so much, Hemendra. Loud and clear that economic, social impact is easier. It's being backed by capital, but environmental and climate, solutions, it's more complex and it requires more time, different kinds of capital, and a lot of partnerships. Thank you so much for that. Now over to Simon. Simon, again, in the earlier session, we heard about the role of the private sector. You represent one of the largest businesses in agriculture globally, and you work with millions and millions of farmers across the world, a lot of smallholder farmers. Now, as a multinational, what do you look for in a startup when working with them in your supply chain? And second, importantly, is what are the clear deal breakers for you?
All right, thank you, Arindom. Yes, at Bayer, we actually all strive to achieve health for all and hunger for none. And me being in agriculture, obviously the hunger for none comes first. And that gives you a first indication also where I would be looking when dealing with startups. Yeah, clearly we look for the same things as anybody who deals with digital startups, which is scalability and bringing efficiencies into the system. And Mark was referring to a lot of specific points where all of them really are of interest to us. I think what they need to do when you come as a startup and want to deal with Bayer, it needs to augment my offerings. It needs to give me something which I currently don't have, such as potentially direct reach to even more farmers than I already have reached to. Just disrupting, yeah, without adding any value is basically a no-go. Yeah, and I see this sometimes coming a little bit from the e-commerce side, where I get an offering that asks me to literally create demand, but they do expect me to give them the same margins or higher margins even than I would give to the existing channel. And that's just not an economical offering to me, at least if there's not a long-term view where you could see, okay, this is going to disrupt the whole of the existing agri channel. But that is an area where nobody has convinced me yet that they found a solution. Secondly, and this is absolutely important back to my original message in terms of hunger for none, there needs to be a passion for agriculture. And there needs to be an understanding that agriculture is different. We do not have in India-wide or worldwide or whatever machine park of farming equipment that you could Uberize as you did the taxi industry. Yeah, and this is where sometimes reality strikes when you take a look at agriculture. So from that perspective, really a vested interest to advance farming and improve farmer economics, again, also to Mark's point, consistently, sustainably, is absolutely essential when approaching a company like ours. And an absolute no-go clearly is somebody that just comes to me to look for an exit. Yeah, so it is also clear that a startup needs to be ready to work with me over time. I'm not saying that there is not an opportunity for a company like Bayer to invest, but if the only reason to come to Bayer is give me resources or help me to do an exit, then probably we're not going to have a deal. Thank you.
Thank you, Simon. I guess for all the people who are listening into this conversation, that's, as in India, we say Guru Mantra, that if you want to work with large multinationals, large agriculture companies, you need to get the right pitch. Thank you so much, Simon, for that. And Mark, now over to you. Now, you have been investing in India for the last 10, 12 years. Now, does the Indian farm landscape give any special advantages or opportunities for agtech and fintech solution players? What has been the experience with your portfolio companies in terms of scale up? Is there a winning formula for those that have scaled up, and what are the common pitfalls?
Well, I mean, I think that India is a pretty unique landscape because a couple of things. One is, we have north of 100 million smallholder farmers in one country, in one geography, right? So that in and of itself creates a large enough opportunity, what in the venture funding space we call TAM, total addressable market, that it makes it interesting for venture capitalists, for not just specialists like Omnivore, but generalists to look at opportunities there. So you've got a big TAM. I think the second thing is, unlike many countries that have smallholder farmers, lots of challenges. In India, our smallholder farmer ecosystem coexists with what is a massive industrial economy, and that's not normal. actually, right? If you go and think about many of the countries that are smallholder dominated, they're smallholder dominated and that's it, right? Their economy is primarily agriculture. Or, you know, maybe they have one or two other things. But in India, we have a smallholder ecosystem adjacent to a huge general economy with also very, very strong agribusiness companies, global agribusiness companies. And so, you know, and then when you add the startup ecosystem and the venture funding along with it, you have this very unique kind of cocktail that fuels what I think is the most interesting, what I think is definitely the most interesting agri-tech system globally. Because you don't really have this anywhere else. If you think about kind of what agri-tech is in North America, you're trying to improve, you know, the most efficient, most globally connected farmers in the world by like 3%, right? In India, we're really we're playing at a much larger scale with something much more transformational. With respect to like the winning formula, I don't think there's any one winning formula. I think the biggest change that has happened over the course of the last 10 years is agri-tech startups have gone from very specific use cases to building out platforms, right? Platforms and marketplaces that are much more holistic, much more rooted in embedding technology within other layers, within a commerce layer, right? Within an inputs layer, an outputs layer. And you can say, well, you know, why didn't we do that 10 years ago? Well, there wasn't the connectivity and there wasn't the capital, right? It wasn't viable to reach smallholder farmers because we didn't have 4G, we didn't have smartphones, right? It was a very different kind of ecosystem. And no one was putting money in this, right? Some of us here are you know, bald, tired, gray veterans of this space, right? You know, Hemendra has been doing this a long time. I've been doing this a long time. Folks at Encore have been doing this for a long time. And, you know, we've seen this change where now you can actually reach, you know, huge numbers at scale that was much more difficult earlier, but now finally there's the level of capital to support it. If I were to kind of give, you know, advice, I would say two things. One is, you know, if you're trying to do something within India itself, it is better to kind of embed than to try to sell pure technology. It's very hard to get a smallholder farmer to pay for a specific technology where they are being asked to give money upfront for it. But the other thing that I would say is, you know, we've seen some great success in our portfolio where people have innovated in India for global smallholders, and sometimes for global smallholders that are maybe just 25%, right, more progressive, 25% wealthier than the smallholders you find in India, and then the products have taken off like a rocket. One of our portfolio companies, Eruvaka, right, operates in the aquaculture space. It sells 95% of IoT systems for smallholder aquaculture outside of India. It's doing fantastic business in Latin America and in Southeast Asia. And so what I would say, I think, you know, we had folks from Crop in here, right? They've seen great success building in India for global. And so I would say, you know, if you're doing something in India, embed it. If you're looking out, you know, but also be willing to look outside, because you may discover that there are smallholders that are a little bit more progressive in other markets that would benefit from your technology.
Thank you, Mark. Very insightful. I'd also like to add the kind of human talent pool that we have in India. That's also a very big driver. Right. Thanks, Mark. Now, a quick question to all the three panelists, because it seems we are running out of time. Simon, now, have you worked with you know, technology companies across geographies? And if you have, what has been your experience so far, or is it early days for you too?
No, I think it's at Bayer, we're extremely interested and engaged with all players, and we've done so quite a bit. Now, in many ways, India, as Mark has so nicely explained, is a super good breeding ground, right? Also, given the size of my own organization, it's easier for me to run a pilot first in India. And in India, it's very often state by state that you need to do it anyway, right? Especially when you look at, as I was saying, e-commerce, you can start in one state, you need to get a license for another one. But clearly, what we do as a company company as Bayer, and I think this is what we can offer to such a startup, is we run this always from a regional perspective. So actually decisions on whether we go with partners or not are often taken in Singapore, specifically with a view of, can we take it to Southeast Asia? Can we potentially also sooner or later take it to Africa? So we have this lens early on, but the proof of concept is important. And I think that is where we often struggle to scale in India. And then obviously the question whether we take it to Indonesia also becomes a little bit more opaque.
Thank you, Simon. Brenda, a quick question for you. Now, technology adoption needs to be rooted in the local culture for the farmers to really accept that technology. Now, what are the critical cultural and other softer areas that any startup needs to consider to ensure successful integration in different markets? How important is the cultural aspect? Short interjection, please.
Yeah, thanks. I think the first is to understand the cultural dynamics and how their impact will be on the business operations. We continuously advocating for mobile technology, celebrating the integration of smartphones. But when it comes to digital inclusion, we can all agree that women in rural areas are less likely to own a mobile phone and less likely to have access to internet. I think data has shown us that about 37% women less likely to have, if you compare with 51% of men. So it's interesting that it's important to understand this type of dynamics in terms of culture, even if you are going to penetrate the market with different mobile phones, with the understanding that if you look at sub-Saharan Africa, women numbers, about 50% of farmers are women. So you have those numbers that you're dealing with. They don't have access to mobile phones. At the same time, they are the biggest users of digital technologies or the biggest users of agriculture. So this is something that the startup has to be cognizant about. I talked about the access to credit and loans. This is going to be it's huge an area for Southern Africa, also the markets that these startups are going to go in. The agro business, as I mentioned, there's a lot of opportunity for them to create these opportunities, understand how this can be integrated. Keeping abreast of the trends in the market, especially the consumer habits and needs, is going to be important. It's not just the culture, but how do they consume the production? How do they consume some of the elements that are being produced by these farmers? We have seen a growing interest in food safety, not just I think in the UN space, but also in some of the players, and traceability. This will continue to influence productivity and entire food value chain. If you look at Indonesia, we have this a company Cotiva, which is growing a lot of initiatives for farm to fork and traceability and certification. This is going to spill over to Africa in the coming years. So we need to see how this is going to be localized. Like Simon said, it's not just about disrupting the market, but also in terms of creating value. Lastly, I think is what we're calling the avoiding the retrofit pitfall, whereby you are actually forcing a technology to the beneficiaries without creating value. We've seen that it's good to leverage IoT, drones, AI. These are going to be great, but I think it's going to be important to have the passion to solve problems for rural farmers that they're facing, and you're creating solutions that are actually addressing problems by rural farmers. The platform that is being created now, I think it's going to be a great for cross-pollination. It will create market opportunities, not just for the startups, but also in terms of the other players that are going to work in these emerging markets. So it's great that they need to work together to adapt to the needs of farmers and look at necessity and problem solving to ensure that there's effective integration of digital technologies in the agribusiness sector, and more especially that these are solving problems for farmers. Over to you, Arindom.
Thank you so much, Brenda. And Hemendra, you will have the last word. Can you tell us a little bit about the importance of capital? I think it's pretty well established, but your view on how capital can facilitate transfer of technology across geographies. And secondly, what are the critical non-capital support which is required by these technology innovators to be able to offer their services in other geographies?
I think capital has a role to play in two things. One is reducing time to market. In my experience, again, working with agtech takes 12 months, 18 months, 24 months for one agtech to move from India to Africa and vice versa, right? The challenge is finding a local partner an anchor customer, understanding the regulation, right? So you need to fund that effort, right? That could be anything, we can vary from startup to startup, but I think that's where the capital should go. Second is product market fit. I think Kunal also alluded to it. I think that's where the big challenge is. Recently I ran a program called Graph with Beanstalk Australia to take startups from Southeast Asia and India to Vietnam, and maximum applications came from India. But it's not that each startup, despite having a good demonstrated product, it's not that everyone was a good fit with Vietnam, which we believe is a very similar country to what India is. So I think these are the areas. And I think the third minor point is pricing. Typically for international startups to look at India, that's where the biggest challenge is. If you look at the best dairy tech startups in the world, like some Dairy Master from Ireland, or a Kahn system, who make feed mixing machines, and Dairy Master makes cattle wearables. They're very keen to look at India, but the pricing doesn't work, right? So how do you sort of, help them in making, customize it to Indian market? And that's where, again, the role of capital comes in. And I think more than the capital, I believe we need an institution. We need to move away from a program approach. Of course, this is a great program, great start. But if we need to bridge this gap, we need a gap, what I call global agri-tech platform, which essentially need to have organizations which have a similar mandate. That's a ThinkAg from India, a Grow from Singapore, a Grow Asia from Southeast Asia, a Trendline from Israel, a Beanstalk from Australia, a Wageningen University from Netherlands. Can we build this consortium and need to be anchored by someone? And I can't think of anyone else, but someone like a Rabobank or a Gates Foundation maybe, who can bring this organization together so that we have an institution rather than a program, which can work on a more continuous basis and bring all the aligned partners together. I think that to me is a real solution if we want to, cross-pollinate innovation from one market to another in a super fast speed than what we are seeing.
Thank you, Hemendra. Thank you, Hemendra. That gives us great ideas for the future. Maybe the near future, we'll definitely take it up. I'd like to thank all the panelists. I'm getting signals from the host that we have run out of time. And with this, thank you so much. Namaste, and over to Raki.